You know the economy is really bad when you have Suze Orman that just came out and chose 3 top stocks that she believes is recession-proof. Let's hear what she has to say about the recession, and let's hear what she has to say about the 3 top stocks that she is choosing for the recession. So there was an interesting article that came out that said we have a whole lot more to go down, meaning that the S&P 500 is going to go down a lot more than this. And she actually said that in September, it's going to get ugly, as if it couldn't get any more ugly, right? So Suze Orman thinks we're headed for a recession, unlike Cathie Woods, who says we are in a recession, and Jerome Powell that just talked about the vertical supply going all the way up. He thinks that we are going to have inflation go back down within September or end of this year. And she warns that things may get a little bit ugly. Now, these are the top 3 stocks that she likes for safety. Now, she said, I personally think we're heading into a recession, a mild one, either at the end of this year or the beginning of next year. Now, I think that as long-term investors or long-term dividend investors, whatever your strategy is, whether you're a trader or a growth stock trader, I think that you should have some stocks that are recession-proof that can help in any type of tough market, unless you are a full-time trader that just day trades or swing trades off of news or momentum. It really depends on your strategy. But as a long-term investor or dividend investor, I think it's vital to have bulletproof and recession-proof stocks in your portfolio to balance out and make sure your portfolio is not as risky. Of course, it just depends on what your risk tolerance is and how long your time horizon is. But I would personally suggest that. Now, this is not financial advice, it's for entertainment purposes only. On the positive side, Orman provides a solution for those looking for a flight to safety. Now, she calls these stocks safe and sound, and I just wanted to show you what her top stocks were and kind of contrast them with what I'm thinking about recession-proof stocks. She says to have a dividend-paying stock that pays more than 3%, which I found pretty interesting because the safer stocks that she's talking about is normally between 1 and 3% or 1 and 4%. And those are our dividend aristocrats. But of course, you can find some that are more than 3%. She said to make sure you know about the companies and how they work. Of course, do your due diligence always. So at least you're getting something while these markets continue down. Now, I completely agree with that. I think it's very solid advice that when we are in these bear markets and you're kind of like in this negative headspace that's like, oh my gosh, the market is never going to recover. All of my money is going all the way down the tubes. And you're kind of like, oh my gosh, what do I do? It's nice to have like that firepower and that cash reserve, because not only does it make you more optimistic for the future and when we do bottom out, but it lets you have that firepower and get those sales at dumpster fire prices. So the 3 stocks that she said, the first one, which I found was interesting, is your basic go-to dividend stock. Now, you all know what I'm talking about. This is Realty Income, ticker symbol O. Now, this is one of the real estate investment trusts that are known for providing oversized dividends. Of course, this is like your basic investing profile. I personally have this. I love selling cover calls on this one, and I do think it is slightly overpriced right now, but it is consistent. It is great for dividends. And it's honestly one of the best REITs on the market. It has over 11,000 commercial properties, and it's located in all 50 states. It leases them to around 1090 different tenants operating across 70 industries. Realty Income has been paying uninterrupted monthly dividends, note uninterrupted, since 1969. That's 623 consecutive months, blowing this past dividend aristocrat. It's very powerful. Went public in 1994, and it's yielding a 4.4% dividend yield. It pretty much always increases that dividend yield as well. And of course, since it is a REIT, it does need to pay out most of its revenue to its shareholders. That's just one of the legalities. And also, Credit Suisse analyst Okusanya initiated coverage of Realty Income with, of course, an outperform rating with a price target of 75%, which is a potential upside of 9%. So, do I think this one is worth it? Definitely. I think every investor should have ticker symbol O if you want a good, solid REIT and a nice 4% dividend. What I would like to say is that I think there are some that are more undervalued right now, and I'm especially thinking of the BDC ticker symbol Main Street Capital. They now have a 7% dividend, so I believe that that's a little bit better right now, especially since the prices come down to a more fair value. I think that that would be a better hedge against recession because it is a bigger dividend. And they haven't cut their dividends either. It's a monthly dividend. Now, I would also say that I personally like what Warren Buffett is buying, which is ticker symbol STOR, or STOR. This is another realty investment trust. It's paying about a 5% dividend right now, but again, it's, in my opinion, severely undervalued, and the revenue has just been increasing. They've been on a roll. They've been increasing dividends. I'm expecting another dividend increase, hopefully next quarter. So I would choose those two if you already have ticker symbol O in your portfolio, but I do think that's a good one. The second stock is Chevron, or ticker symbol CVX, of course, because of the oil industry. Oil prices are crazy. And I actually just made a Warren Buffett video, but he owns Chevron and owns Oxy. And I believe those are for turnaround plays, because with supply and not being able to essentially make up for the demand, oil prices are going to just keep skyrocketing. And this one actually does have a 3% dividend yield. Oxy has a lower dividend yield because they cut it during 2020. So obviously these are big winners amid the Ukraine crisis, unfortunately, and it's up 21% in 2022. As an oil and gas supermajor, Chevron's business is firing on all cylinders. Q1 reported earnings of $6.3 billion, which more than quadrupled the $1.4 billion in the same period last year. Revenue totaled $54.4 billion for the quarter, up 70% year over year. Now, they are saying that for Oxy, because both of these are in correlation to one another, the forecasters are calling for a 25% increase in revenue. So to see these numbers is just outstanding. They're approving a 6% increase in the quarterly dividend, so they are now at a yield of 3.9%. And Orman, as well as Buffett, sees further upside in oil, but these stocks can be a bit volatile. I do believe that oil stocks should be going down a little bit, but it's interesting because whenever anything in the stock market goes up, oil goes down, and when oil goes up, everything else in the stock market just goes down. She said that oil will go up to $135, maybe $145 a barrel, and I have seen that may be the case, but you need to watch your oil stocks carefully because it can turn on a dime. That's definitely true. Especially during 2020, the oil stocks were not in a great place and they accumulated a lot of debt. So you need to be careful with them. They're cyclical. Warren Buffett was buying Oxy and he does have Chevron, and they're actually his best dividend plays. Now, personally, I'm not buying Chevron or Oxy. What I'm buying is Sunoco, ticker symbol SUN, because again, it has a higher dividend yield. And while these are a bit more cyclical, that is more Long term, it has more consistency and more steady cash flow because it has long-term contracts and it's a fuel distributor. Now, you may know Sunoco from NASCAR, or I'm a big NASCAR fan, so comment down below if you're a NASCAR fan, because Sunoco, I definitely know that. Like, my dad would be very mad at me if I didn't mention NASCAR at least once on this channel. So Sunoco is one of my go-tos. They have a lot of long-term contracts and over 10,000 distributors. And they have a yield of 7%. So I would definitely say for this one, Chevron is great, but I would just go with Sunoco. Now, her third one, I do have a little bit of trouble with. And this is AT&T. And I don't know if it's me just having some nightmares over the dividend cut, because I did own it in my E-Trade account. But then there was the dividend cut. I decided to keep it. During the spinoff, I actually sold the spinoff shares, even though I do think it is good, but I wanted a better price. And I still do have a little bit of AT&T, but it's not one of my favorite stocks. I really do not like the fact that there was the dividend cut basically out of nowhere and the stock just pummeled. So the reason she said is it's the largest telecommunication company in the world. More than 100 million consumers in the US use its mobile and broadband services. At the same time, the company also serves nearly all of the Fortune 1000 companies with connectivity and smart solutions. And because wireless and internet services are necessities for the modern economy, AT&T generates a recurring business through thick and thin. We love recurring businesses. That's really great. The annual yield is 5.3%, which, yes, that's good. Tigris financial analyst Seth has a buy rating on AT&T and a price target of $28. Considering that the stock trades at $20.90 today, his price target implies a potential upside of 34%, which is kind of amazing. That's pretty great. So I'm wondering if that was before or after the spinoff. If it was afterwards, then yes, that's wonderful. I do believe with the spinoff, they were able to divest a lot of debt onto the other companies. So I do think they're building back better with that. For me personally, that dividend cut, AT&T is just not one of my favorite management companies anymore. They used to be. I used to like them and Verizon. But what I would say for them, if you're looking for a recession hedge, they might not be the best pick. For me, I would go with ticker symbol JEPI, JEPI. And now this is actually a strategy that is basically like a covered call strategy, but it's the JP Morgan equity premium income, and it has a dividend income or dividend yield of 7.5% every single month. So every single month you're getting 7.5%, which is better than the 5%, plus you're getting so many more companies. They don't say what companies they have, which I find a little interesting, but I also made a video about JEPI because it's one of my favorite hedges against bear markets and recession and inflation. It's one of my favorite income ETFs, just because it has that downside protection. If you notice, the stock price is just going on an upward trajectory. They know how to hedge for inflation. They know how to hedge for risk. The management team has been phenomenal. So while you're getting that capital appreciation, you're also getting that 7.5% return. Management has 30 years of experience, and I just personally love getting dividends every single month. It hasn't been on the market for that long, but I really think it's a very good price. So it's been on the market since about 2020, which does make it a little bit riskier. But the monthly dividends really do help a lot. And they basically sell ELNs, or what are called strip bonds. So they're basically just getting the interest on that. It's kind of like a covered call strategy, but not really. It's a lot less risk. And they also just have a nice steady stock price, so you won't have to worry about QYLD, its price just plummeting 30%. You won't have to worry about Newsy. Let's not talk about that one. But you're also getting that 7.5% dividend every single month. So I would just like that one a little bit better. But for long-term investors, and especially dividend investors, really any type of investors, I would just say to you that you should always have some type of risk management and some type of protection, even in great times, especially in great times. You should have these nice, solid, consistent dividend stocks in your portfolio just to balance everything out. If you're young, if you have a really long time horizon, if you love risk. Even Jeremy on financial education, he has a dividend portfolio. And he loves risk. So just make sure to balance everything out, because as investors, we do want that cash flow. And a fun little quote that I found yesterday was that the S&P 500, 40% of its ROI, or return to investors, return on investment, is from dividends. 40% is from dividends. So if you don't think that dividends can make you wealthy or can have you retire early, just look at that stat from the S&P 500. Anyway, this is Supergirl Investor, here to save the world and make you wealthy. And I just wanted to give you a quick update on what's going on with Suze Orman, and what's going on with her prediction as far as the recession goes. I just found this really amusing because I haven't heard from her in such a long time, and she used to be one of my first inspirations for financial education before I started going to NYU, before I started doing finance. And it's just interesting to hear what she says now based on what I know. And I also wanted to put a link down below for Meet Kevin, because I just saw a video of his that I really loved, and he explained very well about this vertical supply that Jerome Powell is talking about. And I personally believe what Meet Kevin is saying, as opposed to Kathy Woods and Suze Orman. I know that Kathy Woods has a lot of experience, so I'm not trying to. I love Kathy Woods and I love Suze Orman. I'm just saying that as far as macroeconomics goes, I really think that Meet Kevin has a handle on it. And I think how he explained it was very interesting. So I'm going to link that down below. If you want to click on it, he just explains what vertical, basically why Jerome Powell was saying everything was transitory and it's not, but now we know, and it's actually going to get better a lot sooner. And, you know, I'm always the optimistic, so let's hope that's the case. Anyway, the Supergirl Investor signing off, here to make you wealthy and save the world. Please comment below what you would like to hear next. And if you think that Suze Orman is right, or what are your thoughts on the recession, and do you have any other stocks that you think are recession proof? Bye, see you in the next one.